But let's talk about this market open because we do see stocks a little changed. Still, what's working in 2026 is similar to what worked in 2025 in equity trades. And of course, investors have been adding to their positions in this new year. Well, joining me now to talk more about the economy and what is ahead is Larry Werther. He's the chief U.S. economist at Daiwa Capital Markets America. Larry, welcome.
Kristen, thanks for having me.
Happy New Year.
Happy New Year to you as well.
How is 2026 looking to you from an economic standpoint?
I think it's looking very much like 2025. The macro backdrop remains constructive. I think there's a good bit of uncertainty certainly generated by the Trump administration, but at the same time, financial conditions are expected to ease further with easing in monetary policy. And I would add that I think the economy is going to get a bit of a tailwind from fiscal policy as well.
What does this mean for Fed rate cuts in 2026?
It means there's going to be a lot of debate between now and the end of January. My base case is for 2 cuts this year, although I'm open to the possibility of more on account of expected softening in the labor market. But I think there is a split on the committee right now, and officials are pretty divided on which way to go.
So, of course, the Fed has a dual mandate: maximum employment and contained inflation, stable inflation, if you will. And we're going to get jobs figures this week. We did get ADP this morning, did show about 41,000 jobs added last month in December. The non-farm payrolls report on Friday. Paint the picture of the jobs market for us.
I would say that right now, the underlying labor market is softening, and I would point to several things. First off, if you recall Chair Powell's December press conference, he noted that the numbers right now are probably being overcounted by about 60,000 per month. We also saw the preliminary benchmark revisions a few months ago that suggested job growth through the spring was softer than previously reported. And I would also highlight that for November, the unemployment rate moved to 4.6%. So as I view the labor market, I see momentum to the downside. And I see that keeping the door open to more cuts rather than less this year.
How does this impact yields? We've seen a steepening yield curve recently, of course, with the shorter term trending down and the higher end going a bit up.
You know, there's a push and pull going on in the Treasury market right now. My base case is for further bull steepening this year. 2s10s are at about 70 basis points right now. I'd expect it to be around 90 at year end. Certainly the expectation for further rate cuts is anchoring the front end. But on the other side of the coin, Treasury is going to have to increase coupon issuance at some point. Whether or not the foreign bid remains for the back end, if that continues to materialize throughout the year, especially with Japanese yields rising, for instance, this all remains to be seen, and I think there is a push and a pull, as I said, but my base case is for ongoing bull steepening, maybe another 20 to 25 basis points or so. And we already saw a move earlier this year.
Can the consumer hold up in this environment?
Yes and no. What we're seeing right now is an evolving K-shaped consumer sector, and that's been the story for some time. Higher income individuals and households are continuing to spend, but there is some hesitation in the lower end of the income spectrum. And now, especially with the labor market softening, I think we have to be a bit more concerned about lower income households into the year. On that point, I've built in a bit of a slowing in consumer spending in the middle quarters of the year. Still think we do pretty well overall with GDP and consumer spending, but we're not going to see a 3-handle on consumer spending again like we did in the third quarter.
Have you seen corporate America be able to weather this situation?
Profits across the spectrum have been pretty good. I view firms that sell primarily to lower income individuals trying to tweak their guidance a little bit, but in general, I think the prospects for the corporate sector and specifically those that interface with the consumer are still pretty good.
All right, Larry Werther, he's chief U.S. economist at Daiwa Capital Markets America, joining me in studio. Larry, thank you.
Thanks so much, Kristen.